Welcome, welcome. Thank you for coming to our webinar today. My name is Marche Butler. I'm the webinar director at Advice Chaser. Before we introduce our guests and get started, I need to do a bit of legal housekeeping. Advice Chaser, the host of this webinar, is not a registered investment advisor. We cannot and do not give financial advice. Today's presentation is for educational purposes only and cannot be considered advice for any person's individual situation. Advice Chaser regularly hosts informative webinars such as this one, featuring a variety of knowledgeable professionals, many of whom are licensed advisors. Any opinions, ideas, jokes, or principles expressed by presenters are their own, and however true, funny, or interesting are not endorsed by Advice Chaser. Please do not act on the information you hear today without consulting a qualified financial professional. We're thrilled to bring you this educational presentation. Attendees are muted, but we encourage you to ask questions using the chat box. The presenters will answer those queries during or after the webinar today as appropriate. And if you ask a question in the chat box, go ahead and leave your phone number as well. If we can't get to your question during the event, we'll make sure someone reaches out to you after today's event. And we want this experience to be as educational as possible. So please don't hesitate to ask for clarification or expansion of the material. I'd like to introduce you to today's moderator. And here's some pictures of our wonderful panel today. Jean Gallagher is with Seaside Solutions as an investment advisor representative and a registered representative of GWN Securities, Inc. A native of Maine, Jean spent many years in management and customer service while she and her husband, Michael, raised their children. Jean started her financial advising career when the couple moved to Florida. After 10 years and establishing her office in Florida, Jean took the opportunity to relocate to California to be closer to her children and 2 grandchildren. She still keeps ties with the office in Florida and serves clients today in Auburn and the greater Sacramento area. I'd like to introduce you to our presenters today. Mark Kiner is the president of Premier Social Security Consulting. Hi there, Mark, which specializes in helping individuals and couples understand and maximize their lifetime Social Security benefits. The business also provides Social Security education and training for professional advisors looking to better serve their own clients and educating them about Social Security. Mark obtained his Bachelor's of Science degree in Accounting and Finance and a master's degree from the University of Cincinnati. He is a CPA and has 35 years experience in public accounting. Jim Blair is a former Social Security administrator and is the lead consultant at Premier Social Security Consultant. Jim has over 35 years experience in helping individuals manage their Social Security benefits and taking claims for retirement, survivors, disability, and health insurance. Most notably, he has also served as an operations supervisor and a district manager for the Piqua, Ohio Social Security Office. I hope I pronounced that correctly, Jim. And I also want to welcome Gail Hoffman, who is the marketing director at Premier Social Security Consulting. We have an awesome panel today. And I'm going to go ahead and turn the time over to you, Mark, to get us started.
Thanks so much, Marche. Excited about the opportunity to present to your members and subscribers on Social Security. I'm Mark Kiner, based out of Cincinnati, Ohio, joined by my partner, Jim Blair. Jim, where are you based?
I too am out of Cincinnati, Ohio. And Marche, it's pronounced Piqua, but only the people that live there call it Piqua. Everybody else pronounces it the same way you did. So you're fine.
Well, I'm glad I asked. Now I'll know.
And Gail, where are you based?
I'm in the beautiful Deer Park, Ohio.
Very good. So, Marche, how do you send me the controls? Oh, maybe you've done that
already. Go ahead and share your screen and you should be ready to go.
Okay, just give me a minute here to make sure. Okay, hey, it's going okay. Okay, we're good. It's a lot easier than I thought. Anyway, let me give you a little background about who I am. Like Marche said, I am a
Mark,
CPA.
Mark,
Yes.
I don't think you have shared your screen. You need to go to the bottom of your screen and share.
Oh, okay. Oh, okay.
If not, I can do a backup.
No problem. Host disabled participant screen sharing.
Oh my, well,
Oh,
we will
that's
fix
why.
that.
That's
Don't worry.
why.
I will get you. I will be your, here we go. Now it should work.
Okay, you got it. It does work.
Hey, it's live, folks. That's what happens sometimes
The
when we
beauty
do
of it.
live. There we go.
There it is. Okay.
There we
Okay.
go.
So let me tell you a little about who Jim and I are. Okay. So as you know, I'm a CPA. I started my accounting practice back in 2012. So I concentrate 100% of my time in the Social Security space. My partner, Jim Blair, worked for the Social Security Administration for 35, I call it agonizing years. Jim, talk about your experience level with the Social Security Administration, please.
Sometimes it was agonizing years, but I would say overall it was a pretty good job. I enjoyed working there. And as was mentioned, I did a number of jobs. Service representatives are the ones that greet you when you walk in the front door. That's that smiling face, at least when you can walk in the front door. Currently, they're, because of all the weirdness, that they're closed to the public. And we don't know when that might open up, but eventually it will. But service reps generally help people who've already applied for benefits. And then for 10 years, I took those claims for retirement, survivors disability and health insurance, moved to the management end of it, and spent the last 9 years as a district manager of the Piqua, Ohio office. So did a lot of jobs while I was at the Social Security Administration, learned a lot of things. You can't work somewhere 35 years and not pick up something. So it was a really good job. I really enjoyed it. And I can't believe how fast those 35 years went.
Jim and I got together in 2010. That's when we set up Premier Social Security Consulting. That point, our focus was to help folks across the country to understand and maximize their benefits. In 2013, we evolved into an education company when we created the National Social Security Advisor Certificate Program. So we do two things, and only in the Social Security space. We do consultations and we educate advisors, increasing their value to their clients. We are also contributing authors to this mammoth of a book, 2021 Social Security Medicare Facts Book, published by the National Underwriter Company, 700 pages, almost 1,000 questions on Social Security, Medicare, Medicaid, and related topics. It's a great book for advisors across the country. I'm going to bypass some slides, folks, because we're going to be talking only for about 45 minutes. Jim, talk about the growth in the program, please.
Yeah, as you can see, when Social Security first started, first payments were made in 1937, 2 years after the law was passed. And there were 52,000 beneficiaries, people receiving those benefits. And what was paid out was $1,278,000 in benefits. If we look at 2019, it's the last year right now that we have statistics for, there were 64 million beneficiaries, 64 million people receiving Social Security benefits. And the amount of money paid out just in 2019 was $1.048 trillion. So that's a lot of money going out. It goes out into the economy, and that's each and every year. We don't expect it to drop under $1 trillion from this point forward. And one interesting fact, just to kind of show you how things are going, since 2000, the number of beneficiaries has increased by about 19 million people. But the amount of money being paid out way more than doubled. It went from 407 billion to $1.048 trillion. And of course, part of the reason is people are living longer, but also, as you may or may not be aware of, you pay Social Security tax on a higher and higher wage. That's what they use to compute your benefit. When they tell you you're going to receive X amount of dollars at your full retirement age, it's based on your past earnings. And so people are receiving higher and higher benefits, more and more money is being paid out.
It's a huge program, Jim. 64 million folks receive monthly benefits, over $1 trillion. Wow, that's a lot of benefits being paid out each year, Jim. So in our class, we focus on situational Social Security. We know every client of a financial advisor or a tax preparer that attends our class is in a different situation. And so we focus on and we emphasize situational Social Security. So every one of you that's on this Zoom with us today, you're all in a different situation. There's no doubt about it. Jim, why don't you talk about the first five and I'll talk about the next four, please.
All right, so we know single people, they have options too. Not as many maybe as a married couple, but there are still options out there. Do you file at 62? Should I take my benefit at my full retirement age? Should I even wait till I'm age 70 or take my benefits somewhere in between? Regardless of your full retirement age, you're going to file for benefits in that 8-year window between 62 and age 70. At least you should. But single folks do have some options they want to look at. Married people have more options because we're looking not only at each benefit for each member of the couple, but in this situation, there can be a survivor benefit that's payable. So we're going to want to look at the different situations. Are they both high earners? Are they close in age, far apart in age? Maybe one's a high earner and the other one was a stay-at-home parent, stayed at home with the kids. And doesn't have much of a Social Security benefit based on their own. They're going to receive a spousal benefit. So there's all sorts of different things for them to take into account before they apply for benefits. Maybe public employees. There are public employees who don't pay Social Security tax on their wages. In Ohio, our state teachers, our public employees, our state school employees, they pay into their own pension plan. And a lot of states are like that. If you are eligible for a pension from work not covered by Social Security, and you're eligible for a Social Security benefit based on your own work record, it's going to be affected. Or if you're eligible as a spouse or a surviving spouse, it's going to be affected. So those benefits are definitely going to come into play. And then, are there children involved? If you have a minor child under the age of 18, or between 18 and 19 and still in high school, or if this child becomes disabled before the age of 22, they can be eligible on their parent's work record, whether that parent's receiving a retirement or disability benefit, or if that parent has passed away. So all sorts of things for people to take into consideration because everybody's situation is different.
Let's talk about divorce spouses. You can collect off of your ex-spouse if you were married for at least 10 years. And we're going to talk more about divorce spouses during this 1 hour webinar today. You might be, if you're a surviving spouse, you can collect off of a deceased spouse's work record. Maybe you can collect off of, maybe you have a choice between two deceased spouses that you can collect off of. Maybe you have a choice relating to ex-spouses that you can collect off of because you were married twice for at least 10 years each. There's an opportunity to claim 6 months worth of retroactive benefits. That's number 8. If you're over full retirement age, let's say you're age 67, you can file for benefits effective 6 months ago and get a nice lump sum check. And your full retirement age, it used to be age 66. Nowadays, it ranges between 66 and 67, depending on which year you were born. For folks that are turning age 62 this year, that means they were born in 1959. Gail, what would their full retirement age be?
Yeah, I know this because that's my situation. Full retirement age is 66 and 10 months. Looking forward to that date.
And Gail, what year was I born?
I don't know that. You're 65.
1956.
Close enough.
So my full retirement age is 66 and 4 months, which is in June of 2022. So if you're turning 62 next year, you were born in 1960. That means your full retirement age would be age 67. Gail, what does situational Social Security mean to you?
I think if you look at the screen right now, everybody's situation, probably everybody I'm looking at right now, has a totally different situation. Me, I was married, I'm divorced. Ex-husband remarried. Mark is a widower, and the lovely Jim has been married to his high school sweetheart for, I think, 52 years.
51.
51.
Close.
Yeah. So just all different situations, different
Perfect.
claiming strategies.
Thank you.
Mhm.
Let's go. Let's look at the bottom of this screen. Item A. She was the first recipient of a monthly benefit. In January of 1940, she began to receive $22.54 a month. She's my hero because she lived to the ripe old age of 100. Now, that's your first lesson of the hour. Social Security would never call you up and say, Mr. and Mrs. Jones, your account is down to zero and your benefits stop next month. You have to make a wise decision early on. Jim, what's the average death age of folks nowadays?
Well, if we look at a male in his 60s, he has an average life expectancy of about age 84. A female in her 60s, we're looking at about age 87 on average. Social Security tells us that folks in their 60s, half of those folks are going to live into their upper 80s, early 90s, and a quarter of those folks will live to be 95 or older. Of course, they don't tell us which one of us those are. We kind of got to figure that out on our own, but people are definitely living longer.
Now, I look at the Cincinnati obituaries from time to time. Over the weekend, I found somebody that passed away at the age of 107. But Gail, talk about your friend, please.
Let me unmute. Okay, my dogs are barking. This is Ethel, and she, as you can see, is 106 years old, 6 years young. And she turned 106 in November. She is my best friend's mother-in-law. She is probably been collecting Social Security for about 40 years. Her husband passed at the age of 75 in 1990. And Ethel was a bookkeeper. Her husband was a machinist. So she's still going strong.
So you can see you may have, you need to plan for Social Security over a longer time period. Like Gail said, here's Ethel. She's 106 years of age. God bless Ethel.
Mm-hmm.
Let's look at some claiming trends. In 1996, 56% of the men and 63% of women began benefits at age 62. Let's fast forward to 2018. You can see the percentages have come down quite a bit. 27% for men and 31% for women. Jim, bring out your cloudy crystal ball. What do these percentages look like going into the future?
Yeah, and if we go back to the 80s, those numbers are even higher. But we think it's probably going to level off. 27% seems about as low as it's going to go for males. I talk to people all the time and ask them when they want to retire. And they always say, well, I want to retire today, but I can't afford to. So I'm going to keep working for a while. And people are tending to work a little bit longer, especially since people are living longer. So we think it'll stay about the same for men. Now for women, it might increase a little bit as you learn that Social Security benefits for a couple should be considered as a household income, as opposed to my Social Security benefits mine, my spouse's Social Security benefits are hers. If we look at it as a household income, we may have one member of the couple file for benefits a little earlier, maybe age 62 or somewhere shortly after that. And the other one then can delay their benefit for a little bit longer to get a higher monthly benefit amount. And if that's the male, then odds are that's going to be the survivor benefit, because statistically the women outlive the men and generally will step into their shoes. It's not always the case. Sometimes the woman is the higher earner, but right now it still trends pretty much where the male is going to have the higher monthly benefit amount. So if he can increase his benefit, that not only brings more money into the household while they're both still alive, but later on when we're looking at survivor benefits, it brings in a higher benefit then too.
So a very common strategy, if both spouses are eligible for their own benefits, we might suggest that a wife take her benefits early. She'll take a haircut. That might allow the husband to wait until full retirement age or age 70 to begin his benefits. And if he was born by the magic birth date of January 1st, 1954, Jim, what's available to him?
Something called the restricted application, where you can file for spousal benefits instead of your own and let your own grow and earn an 8% a year increase. And you can do that all the way up to age 70.
A very powerful strategy, and you need to utilize it if you were born by January 1st of 1954. So how do you maximize your benefits? Well, let's go down to number 6. The smiling faces look at Jim Blair. He was one of those smiling faces many years ago. They're basically, I know I can't see it, Jim. I just can't see it.
Hey.
They're basically just order takers. Don't expect any advice from the nice folks down there when you go down there to apply for benefits. If you can go down, like Jim said, that the offices have been closed since March 17th of 2020. So you can't really expect them to help you to make a wise decision. You have to be able to make a plan. Number one, make a plan to understand and to maximize your benefits. Number two, Social Security may be a joint lifetime benefit. Generally, upon the passing of the husband, the wife will step into his shoes. If he took benefits early, that haircut may last 2 lifetimes. If he's able to wait till age 70, now we're maximizing benefits over 2 lifetimes. Do not think inside the box. That's when you base estimates, you base your options on estimates at 3 different ages: 62, full retirement age, and age 70. You must think outside the box. Stands for Situational Social Security. Can you file that restricted application? Are you single, married? Are there children involved? Or do you have an ex-spouse? How do you, and I know there's survivors in there too. I just can't see it because it's covered up by a whole bunch of pictures on my screen. And how do you coordinate spousal benefits? That's what we call thinking outside the box. And remember, greater than 90% of our recipients do not maximize their benefits. They have no clue what their options are. We know that because we do lots of consultations and we educate advisors across the country. There's definitely a lack of information. I want to just repeat what Jim said about the restricted application. Let's say that's my situation. Let's say I can get $2,000 off my work record. Let's say I'm married and I can get $1,000 off my wife. I can file a restricted application, claim $1,000 off her work record, while at the same time my benefits are growing and earning those delayed retirement credits. It's a very powerful and valuable strategy for folks that are born by January 1st of 1954. So please remember that. If you're born that magic birth date, you should consider taking advantage of that restricted application. Jim, talk briefly, please, about what 50 million people have in common.
Yeah, they have an account on the Social Security website, ssa.gov. You go there and you will see that there is a link to something called My Social Security. And this is an account you can set up. If you're not receiving Social Security benefits yet, you have access to your Social Security benefit statement. They used to mail these out every year to everyone, but they stopped doing that. And now they supposedly mail it out every year once you reach age 60. I talk to people all the time who say they haven't seen a statement in years. So it's kind of hit or miss as to whether or not you're going to receive one. But if you create this account on My Social Security, then you can look at your statement whenever you want. And there's a lot of good things regarding this statement. But some of the other things you can do too, once you're receiving a benefit, you can use it to change your address, change your bank information, request a new Medicare card. If you're getting ready to do your taxes and you can't find that 1099 that Social Security sent you or was supposed to send you, then you can just print it up, or a benefit verification letter. And anybody who loses their Social Security card soon will be able to request a new Social Security card through this account. Also, if you want to file for benefits online instead of either contacting Social Security through the phone or when they open up going into the office, you need to create this account. The Social Security benefit statement is real important. It'll give you an estimate of what your Social Security benefits are projected to be. When you retire, you're going to need a certain amount of money to survive on. The more you can make of that from Social Security, the less pressure it puts on your other sources of income. So you want to know how much that's going to be. That's what this statement is used for. It will give you the amount. If you retire at 62, full retirement age or 70, it'll show you too, year by year, the earnings that are posted to your record. That's how they come up with that dollar amount of $2,355 you see on that benefit statement. That's based on somebody's working earnings. So you want to make sure those are right. The earlier you fix them, the easier it is. If you looked at your benefit statement and to 2015 earnings were missing, odds are you've got that information. But if it was 1985, do you have your tax information from 1985? So this is a real important document. And if you haven't done so already, I encourage you to create this account.
Very good. I have my account. Jim, you have yours. Gail, you don't have yours yet, do you?
I'm sort of halfway there.
Yeah. Okay.
I had one and then I sent the wrong divorce decree. So yeah,
So when was the last time you received a benefit statement in the mail?
you know, I'm not sure that I ever have because I'm
Yeah, I know. I was
61, so
wondering. You don't
don't
have
think
an.
I've received that.
So Gail, you don't really have an online account, but yet you have not seen a statement in the mail. Okay. Well,
Well,
hopefully that will
but I
change.
did, you know, I did speak to Social Security a year ago,
Right.
and yeah, so I'm on file, but just not totally all the way.
So this chart shows you your full retirement age. Folks born between 43 and 54, the full retirement age is 66. You can see it goes up in 2-month intervals. For people born in 1960 or later, their full retirement age is 67. Gail was born in 1959. She volunteered that information a little while ago. Your full retirement age is 66 and 10 months. That gives us, I think, April of 2026. I was born in 1956. My full retirement age is 66 and 4 months, which equates to June of 2022. Jim, explain. Jeannie, you raised your hand.
Oh, I'm
Jean.
sorry. Yes. Well, I did have a
Hi,
question. I
Jane.
didn't think you would see that. Actually, I was waving to my dog.
Oh.
But I do have, but there is a question. But good timing though. There is a question. If we can go back to the other slide for just a quick second. And do you need a divorce decree to set up an account?
Oh, Jim?
No, what they'll do to set up the account is they do want to prove your identity so that it's you setting it up and not your neighbor. And what they'll do is use information off of your credit report. If you don't want to use that, they've recently created a new way where if you have a smartphone, and most of us do, you can take a picture of your driver's license, the front and the back, and somehow they're able to verify who you are through that. And then you've got the account created. So to open the account, you don't need the divorce decree. But if you're going to file for benefits, you may.
I think you might have been a little confused before. I know Gail was talking about setting it in her divorce decree, but I think that kind of related to collecting a benefit off of your ex-spouse. That's why you had to send
that
that
is
in.
true. Yes.
Yeah,
Mhm.
you got it. Okay, great. So I'm glad we clarified that.
Mhm.
Hey, Jim, talk about what's the significance of full retirement age?
Well, full retirement age is the point where you're going to receive 100% of your benefit. It's not reduced for age because you took benefits before full retirement age. Of course, it's not increased because you delayed past your full retirement age. Kind of a strange definition, but we get that from Social Security. So since it's their term, that's what we have to use. What it does is it means you'll receive 100% of your benefit at your full retirement age. It's also the amount of money that we use to determine a whole lot of other benefits. When we're looking at spousal benefits, children's benefits, survivor benefits, we always need to know that full retirement age benefit amount. Social Security calls it a primary insurance amount or a PIA, but it is your benefit at your full retirement age. And then one other thing that it does is at full retirement age, you no longer have to worry about having earnings if you're drawing your Social Security benefit. So if you want to file for Social Security at 62, but you still want to work, then depending on how much you earn, Social Security can withhold some of your benefits based on the amount of your earnings. And that goes away the month you reach full retirement age.
Perfect. So my full retirement age is June of 2022. If I collect before then, it's reduced for age. If I wait until later, I get those delayed retirement credits. So how do we calculate your benefits? Last 3, 5, 10 years, highest 3, 5, or 10, best 20 quarters? Nope. Based on 35 years of earnings. Want to look at your first job at Wendy's? We may take that into account. We do something special to your earnings. We index them for inflation. So if you earned $20,000 in 1985, the indexed amount is about $80,000, $60,000 today. Who in their right mind would know what their indexed earnings are? Nobody. But that's what we do. We index your earnings for inflation to bring them up to today's dollars. Now, many times it doesn't benefit somebody for continuing to work after they begin benefits. They're going to no doubt pay additional FICA taxes, but not going to see much of an increase in their total Social Security benefits. However, though, if you stay at home with the kids, anytime you can replace a 0 year with something positive, it's going to have a nice impact to your benefits. But usually the return on investment for paying additional FICA taxes is usually very, very low. But it's 35 years of earnings, not the last 3, 5, or 10. And like I said, we index earnings for inflation to bring them up to today's dollars. Now, when do you get paid? When can you roll out of bed and see the money in your bank account? Depends on your birthday. If you're born between the 1st and the 10th of the month, your money will be deposited in your bank account on the second Wednesday of the month. Born between the 11th to the 20th, the third Wednesday, and the 21st to the end of the month on the fourth Wednesday. So if I begin my benefits in June of 2022, I was born on February 13th. So the 13th day of the month, I will receive my benefit the third Wednesday in July. So benefits are always paid on a Wednesday, either going to be the second, third, or fourth Wednesday. Now, folks that were receiving benefits in 1997 or earlier, they will continue to receive their benefits on the third day of each month. But but folks out there now that are applying for benefits, just this is the schedule they'll get paid off of. Jim, talk briefly about the reduction, please.
Well, as I mentioned, if you file before full retirement age, it's reduced for age. And you can file as early as age 62. And so if you were born in that group where your full retirement age is 66, if you take benefits at 62, you're going to receive about 75% of your full retirement age benefit. So it's reduced about 25%. If you were born in 1960 or later and you file at 62, that they didn't adjust that date, the initial date at all, but you see a 30% reduction. You're only going to receive 70% of your full retirement age benefit. And you can see that depending on the year that you're born, the reduction amount, at least the maximum reduction amount, is a little different. Just depends on whether your full retirement age is 66 or 66 and 2 months, 4 months, and so on. But you're going to suffer that reduction, and you will see that reduction for the rest of your life. The good news is you get money sooner. The bad news is it's reduced for life.
So there's no magic wand here. You take your benefits before full retirement age, it's reduced for life, like Jim said. It does not by magic go up at your full retirement age. If you wait beyond your full retirement age, your benefit will go up 8% per year, which is like saying 2/3 of 1% per month. So if your full retirement age is 66 and you wait to age 70, now your benefit has gone up 32%. You know, if you take it early, it's reduced for life. If you take it after full retirement age, the delayed retirement credits are permanent. Delayed retirement credits end at age 70. So no matter what you hear at that Super Bowl party, that you can get delayed retirement credits after age 70, don't listen to that person. If you wait beyond age 70, you might be forfeiting some of your benefits. If your full retirement age is 67 and you wait to age 70, now your benefit has got up 24%. But delayed retirement credits is a good thing. Now, Jim, how many folks actually wait to age 70 though?
It's only about 4% of the folks wait all the way to age 70. A lot higher percentage wait past full retirement age. They just don't wait all the way to age 70.
Jim, we spent about an hour in our class on spousal benefits. It's so important to explain the rules relating to spousal benefits. But before you talk about spousal benefits, Jim, I want to make one comment here. In order for you to collect off your spouse must be receiving a Social Security benefit. So does your spouse draw early at full retirement age so you can collect off his or her work record? Or does your spouse wait to age 70 which will give you the opportunity at that point to collect off your spouse's work record. So for your spouse to collect a benefit, then your spouse must be collecting. Jim, I'll finish the next 2 slides and I'll let you talk about divorce, folks, okay?
All right.
So for my wife to collect off my work record, she must be at least age 62. I must be receiving a benefit, retirement or disability. So if I turn my benefits on at 66, she can collect off my work record as long as she's at least age 62. But what if I decide to wait till age 70? Then her spousal benefit off my work record is going to be delayed for 4 years. So you have to give that some thought. So for a wife to collect off the husband or the husband to collect off the wife, the spouse that you're looking to collect off of must be receiving a benefit. And of course, you have to be married to your spouse for at least 12 continuous months. How much do you receive off a spouse? 50% of their full retirement age benefit. So if my full retirement age benefit is $2,000, my wife can draw $1,000 at her full retirement age. If she claims it early, like at 62, then she takes a 30% haircut. So a spousal benefit is equal to 50% of what the other spouse's full retirement age benefit is. My full retirement age benefit is $2,500. My wife can get $1,250 off my work record. Now, Jim, talk about divorce, folks, please.
Yeah, a divorced spouse can receive benefits if they meet certain conditions. One, you have to be single. So you can't be married and draw off of your ex-spouse's work record. It doesn't matter if your ex is remarried or not, but you have to be single. You also have to be at least age 62. You can be older, but at least age 62 to draw those benefits. You had to be married to your ex for 10 years or more. And this is basically continuous. There is an exception, and that is if you're divorced in 1 year, if you remarry your same ex-spouse within the following year, then they will disregard that divorce. So for instance, someone was divorced in June of 2019, and they remarried their ex-spouse in November of 2020, Social Security is not going to hold that against them. They would still consider that part of the 10-year period. And then, as Mark said, just like with a spouse, your ex has to be receiving either a retirement or a disability benefit. So your spouse doesn't even have to be 62. Maybe they're age 58 drawing a disability benefit. But now you can draw off of their work record if you meet these other requirements. But what if your ex-spouse isn't going to apply for benefits? Maybe they want to wait till age 70 to start their own. There's any number of reasons why they may not apply. We have something called independently entitled divorce spouse. And a lot of the requirements the same. You still have to be single. You still had to be married to your ex-spouse for 10 years or more. But now both of you have to be at least age 62 or older, and you have to be divorced for 2 years or longer. And if you meet those requirements, it does away with the requirement for your ex to have filed for benefits before you can file off of their work record. So you and your ex both turned 62. Maybe they're still working, have no intentions on applying for Social Security benefits yet.
All right, we
But-
lost your sound there, Jim, for a second. Just
Oh,
that
okay.
last sentence.
All right. So you and your ex-spouse are both age 62. Your ex-spouse has no intention of retiring. Maybe they're still going to continue to work. And you want to draw off of their work record. Well, as long as you meet these requirements, you're single, you were married to them for 10 years, you've been divorced for 2, you could go ahead and file for benefits off of their work record, even though they haven't applied.
What if you have more than one ex-spouse? You may, here we go. Let's find that slide. Oh, that slide's not on here. Anyway, if you have more than one ex-spouse, if I have 3 ex-spouses married to them for at least 10 years, they could all draw off me at the same time if I was the lower earner. If I was the higher earner. If I was the lower earner, I can pick which ex-spouse I want to draw off of, whichever one would give me the highest benefit. So how many ex-spouses can you fit in that you were married for 10 years? Well, that's up to you. If you have 2 or 3 ex-spouses, you were married for 10 years, you might be able to pick and choose which ex-spouse you want to draw off of. Just depends on when they're turning age 62. Now,
Mark?
we only have about,
Before we move on, Johnson did have a great question and that we answered within the chat, but I don't think that all of the attendees saw the question. So I thought it would be take a quick moment just to ask and answer. Johnson's question was, does spousal benefit decrease my benefit?
Jim?
No, it does not. So that's a good thing. If a spouse files for spousal benefits on your work record, you still get the same amount, and then your spouse receives their amount, but it does not reduce your own.
And let's take it one step further. What if my ex-wife wants to draw a spousal benefit off my work record? Jim, does that decrease my benefit? And better, does it decrease my current spouse's benefit?
Well, fortunately for all involved, no, it doesn't decrease anybody's benefit. So you, your spouse, and your 3 ex-spouses can all draw off of your work record, and nobody's benefits are affected in that case.
Okay, we only have about 5 minutes to speak because we want to answer some more questions. So Jim, why don't we kind of slide right through to our 4 three-legged stools? Can we do that?
Sure.
Okay, so this three-legged stool shows a married couple, some of their strategies. We could have one spouse waiting to age 70. That generally would be the husband, but it could be both husband and wife. That allows us to maximize surviving spouse benefits. That's leg number 3. And then we want to coordinate spousal benefits and utilize situational Social Security in looking at somebody's claiming strategies. Now, for a married couple, depending what the situation is, they're going to have different strategies available to them. 5+ years difference in ages, where the husband is older, would maybe mean we want to maximize surviving spouse benefits. If the wife is older than the husband by 5+ years, maybe we don't want to maximize surviving spouse benefits. And so even within the category of couples, you still have different options depending on what their personal situations are all about. Jim, why don't you talk about single folks, please?
And as we mentioned earlier, they have options as well. They can file at 62, full retirement age or 70. They also need to keep in mind that if you want to take your Social Security benefit before your full retirement age and still continue to work, either earning wages, say W-2 income, or you're self-employed, it would be your net profit from your self-employment. If you exceed a certain amount, Social Security is going to start withholding some of your Social Security benefits. And depending on how much you earn, you could lose it all. So you are subject to that earnings test. But another big one, when you pass away, benefits end. Nobody's going to step into your shoes and receive those benefits. You're not thinking or worrying about a survivor benefit. So when the single person passes away, their benefits would stop.
Hey, Jim, there's a question about trying to get information about an ex-spouse. Social Security won't let this person know what that benefit would be. How do they get around that?
Well, they have to tell you what you are eligible for. So they're not going to tell you what your ex is eligible for, but they have to tell you what you're eligible for as either a divorced spouse or a surviving divorced spouse. And what they're going to make you do is prove that you were married to that person and that marriage lasted 10 years or more. They're going to want to see a divorce decree. If the divorce decree has a date of marriage on it already, that's all you need. If it doesn't show the date of marriage, then you would have to provide the marriage certificate and the divorce decree. It's a little more difficult because the office isn't open. You can't take that information in at this point, but you can still work with the local offices to get that done. It is a little harder. And for some reason, well, I guess because of privacy, they don't want to give that information up. But if it's your benefit, they have to give it to you.
Let's look at divorced spouses. You can collect off your ex-spouse if your ex-spouse is still living or deceased. Of course, anytime you're receiving a benefit prior to full retirement age, earnings test will apply. Keep that in the back of your mind. And like we said earlier, if you've been divorced for less than 2 years, your ex must be collecting a benefit. If you've been divorced for 2 years or longer, then you're considered to be an independently entitled divorced spouse. And you can collect off your ex, even if they're not collecting a benefit. Now, Jim, finally, let's finish the webinar talking about surviving spouses, please.
surviving spouses have some options. You can file for a survivor benefit at age 60 or older. You can actually apply as early as age 50 if you're disabled within 7 years of your spouse's death. But you can file at 60, switch to your own at 62, or full retirement age, or even wait till age 70 and earn those delayed retirement credits. Or you can take your own at 62 and then switch to the survivor benefit at your full retirement age. Just depends on which benefit is the higher at whichever points. You are subject to the annual earnings test if you're under your full retirement age, but you're still going to want to look at, can I take a lower benefit in the beginning to get a higher benefit later? Because odds are that higher benefit's the one I'm going to receive for a longer period of time. Oh, we lost you, Mark.
Mark, I don't think your audio is working there.
It is now. I turned it on. Anyway, sometimes I turn my audio off because I don't, if I'm making any extraneous noises, I don't want you to listen to that. Anyway, my spouse is 4 years older than me, but I'm having the higher income earner, but I am the higher income earner. Do we wait till he is 70 for him to collect his benefits? So spouse is older, but the younger spouse is the higher income earner. Jim, what do you think?
Well, it's certainly something you would want to look at. Keep in mind that you can't draw a spousal benefit until he files on his own work record, but it just depends on what you're eligible for on your own work record as well. I think you also asked a little earlier or mentioned that maybe one or each of you were maybe born before that date of 1/1/1954. If that's true, one of you could go ahead and file for your benefits now, say the lower earner of the two, and then the higher earner could file that restricted application and wait till age 70. That way you still have money coming in. But you don't have to wait till 70. That gets you the most amount of money, in a survivor situation. But, that's not always still what people want to do is wait until age 70. But it's something you could at least consider.
Jim, I thought we were done, but then Enza is asking us to explain the windfall elimination provision. So we'll end with this slide, okay?
All right.
If you're eligible for a public employee pension and your own Social Security benefits, the windfall elimination provision may reduce your benefits by as much as $498. But if you're eligible for your own Social Security, you'll get something. It won't be zeroed out. So if I'm eligible for my own for a public employee pension and my own Social Security benefits, I'll get something off my work record. It will not be zeroed out. Now let's talk about government pension offset. That's when you're eligible for your own public employee pension and a spousal Social Security benefit. That could be a benefit off of a current spouse, off of a deceased spouse, off of an ex-spouse. Now this is called the government pension offset. There's a 2/3 offset here. We reduce what you can get off your spouse by 2/3 of your state pension. Probably not going to be anything left over for you to receive. We call this by another name. We also call this grumpy partner offset because we know what partner is not grumpy when they find out they're not going to receive a Social Security benefit off of their spouse. So the windfall elimination provision, if you're eligible for your own Social Security as well as your own public employee pension, you'll get something off of your Social Security work record. But when it comes to receiving a spousal Social Security benefit while you're receiving a government pension, the grumpy partner offset will probably wipe that away and not make you eligible for anything off of your spouse. Now in Ohio,
Mark, on this subject, if you're interested in a little more, if you just Google WEP fact sheet or GPO fact sheet, it will give you the link to download. It's just 2 pages. Each one's just 2 pages, but it explains these pretty well too. So WEP or GPO fact sheet, and you can get a little more information on it.
Now, Jim, there's a question about what happens in 2035 when the $3 trillion Social Security Trust Fund goes away. What will
Yeah.
happen to people's benefits, Jim?
If Congress doesn't make any changes, then people will see a cut in their benefit. By law, the Social Security Administration cannot operate in the red, and they'll still have money coming in, but just enough to cover 79% of their obligations. So the good news is you'll still get your benefit. The bad news is it'll be cut 21%. I haven't found anybody yet who gets excited about a 21% pay cut. You might want to speak to your local congressman and let them know to get busy on this, because the sooner they can make the changes, the less painful it'll be for everybody.
Okay. Thank you, Jim. Appreciate that. Yeah. Sooner they can make the changes, Jim. What a laugh.
Yeah.
What are we looking at? 2034 before they make these changes?
Oh, they love to wait till the last minute. I'll give them that.
That's only 14 years from now. Sometime between now and then, both the Browns and the Bengals will make it into the Super Bowl. I know it.
Oh boy.
I'm a Browns fan. Gail and Jim are Bengals fans. Bengals.
Oh,
Okay.
Mark, I've gone ahead and taken over the presentation, and we just
I've
have
noticed.
question and answer time now. I know Jean has been keeping an eye on the chat so that we can answer any more questions that come up.
I think we've really covered a lot of the questions as they've come up so far. The only outstanding question, I think that Mark had addressed half of it, and when we were talking about the spouse that's 4 years older, but the prior question to that for Bosch, and I hope I pronounced your name correctly, is if their retirement age is 67, do they both have until 67 to start collecting?
Well, they can go ahead and start collecting now, or they can wait. What it's really going to depend upon is how much their Social Security is going to be. Sometimes a spousal benefit isn't payable. You think that it would be because somebody's a real high earner and the other one may not has been a high of a earner, but it's only based on half of their amount. So spousal benefits sometimes are not payable, and that surprises people, but that means you're eligible on your own. So they're each separate. One could file now, one could wait till 70. They can both wait till 70. That's what we would want to look at. You would want to look at those situations, both waiting till 70, both filing now, or each of them filing now and the other one waiting till 70. And is that restricted application going to be a factor in that as well? That could be a real important strategy.
And that really is something that is very personal too, because the answer to the question for one person might be very different from the other.
Exactly.
Now, the Johnson would like to know, he is a federal employee with a pension and a TSP. How much of his benefit would be reduced?
If he's in the TSP, there's a good chance that that federal employee was under FERS, the Federal Employees Retirement System, instead of civil service. If you're under FERS, there's no reduction in your Social Security. You're not subject to the windfall elimination provision, and you're not subject to the government pension offset. If the pension, though, is civil service, then the windfall can reduce the Social Security benefit by up to $498. It may be less. And you would also be subject to the government pension offset, meaning, are you going to draw a spousal benefit? Probably not. Hopefully that answered it for him.
Does anyone else have any further questions that Jim or Mark can address?
There was a question about if you will receive a recording. Yes, to the attendees, we will be sending out a replay link. And this webinar will also be hosted on our YouTube channel, so you can refresh your memory. I don't know if we have any more questions, so I'm going to go ahead and thank everyone on behalf of Advice Chaser. We want to thank you for attending. We want to thank the speakers and the organizations that have worked with us to bring you this webinar today. Look for an email, like I said, soon with a link to the replay of this event. You're welcome to share that with your friends and family. Here at Advice Chaser, we are all about helping you find a financial advisor who is a great fit for your life and your financial questions. Our matching service is free to you, and every one of our advisor partners has committed to offer a free initial consultation to anyone we introduce them to. Find out more by going to advicechaser.com and clicking on the link to find an advisor. Once again, for Advice Chaser, thank you so much for coming, and we will see you at another webinar very soon. Bye, everyone.
Thank you, Marcia. Thank you, Jean.
Bye.
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 Thank you so much.
Thank you.